Hey everyone, I'm June. I'm a researcher with DXpert. Trends in the ETF market is poised to shake up the investing world in 2024, and today we will expose some of its secrets. Now, let's start today's sharing session by diving into the world of China ETF. The CSI 300's lackluster performance in China has been causing some serious frustrations among investors. They are on the lookout for new opportunities, especially diving into cool areas like cloud computing and AI ETFs, which is still creating a buzz nowadays. The first quarter of 2023 was a boom with some epic gains, but just as quick, the market took a 45% dip in the third quarter. Talk about volatility, right? Now, here's the twist. State intervention and sector support are adding some extra drama. It's like this boom-bust cycle are playing out on a global stage. The market's movement is heavily influenced by external factors, and it's wild to see how things unfold. Check this out. Enhanced index funds in China, with a cheeky 20% being actively managed. JP Morgan is eyeing to drop more of this ETF in 2024, shaking up the investment scene. What caught my eye is how monetary policy isn't doing much when it comes to China A shares, as China is facing deflationary rather than inflationary pressures as compared to other countries due to its property market slump and weak spending. Hence, it's more about China's fiscal policy doing the hustle to potentially kickstart a broader market rebound. The China property market slump is making wave in China. It's like a domino effect hitting the entire country. Even the stock market is feeling heat. But guess what? Savvy investors are up too. They are seeking shelter in the cozy world of thematic ETFs. Now, let me drop some names for you. Ever heard of the Global X China Electric Vehicle and Battery ETF that is issued by Mirai Assets? It's got some heavy hitters in its top 10 holdings, including BYD and contemporary Amperex Technology, or CATL, as more commonly known. Here are some facts. BYD is the underdog that has recently turned into a superhero, beating Tesla to snatch the title of the world's largest EV manufacturer. Warren Buffett's got some skin in the game as well, with BYD being in his portfolio. That's some brilliant stock selection. Now, since ETFs are a basket of carefully selected stocks, fund flows to thematic ETFs could boost the individual stocks as well. So, what's your take on thematic ETFs? Keep a close watch on these trends. Might just uncover some sweet opportunities for us, savvy investors. Exciting times ahead. The ETF scene has just keeps getting more interesting. Now, check this out. Actively managed ETF are making a new trend and stealing the show. Nowadays, actively managed ETF record 71% of new ETF launches. It is no wonder that Australian ETF scene is also making a buzz. They are gearing up for a total makeover in 2024, and JP Morgan, Dimensional, and Macquarie are all getting in on the action as well. And word on the street is that actively managed funds might just steal the spotlight from the passive ones in the next 3 to 5 years. Bloomberg Intelligence estimates are throwing in their 2 cents, predicting a shift where active ETFs could outshine the passive ones. Big move, right? Here's the scoop. The current 29% share of active ETFs in Australia is on the rise, and with these heavy hitters stepping in, it's like adding fuel to the fire. Investors are likely to have their eyes glued to these new launches. The potential transformation in investment strategies down under is definitely something to keep an eye on. Now, let's talk about some numbers. Despite a bit of a snooze fest in flows to active ETF in 2023, as compared to 2022, which clock in at about $10 billion, there's a cool twist. The crowd seems to be favoring fixed income funds over equity products, which makes sense, right? With interest rates on the rise and staying high, fixed income gets the spotlight, especially as we hit the end of the hiking cycle. Active ETFs are flexing with an average performance of 9% in 2023, while the benchmark S&P to the Australian Stock Exchange, the ASX 200, stays relatively chill. After a whole decade of waiting, it looks like the US Securities and Exchange Commission might just give the green light for ETF that directly holds Bitcoin. And guess what? The debut is set to be the talk of the town on January 10, 2024. Mark that on your calendar. It's definitely going to be in the headlines. The potential demand for crypto exchange traded products (ETP) in the US is giving off some serious intrigue vibes, especially when we peek at what's been going down in Canada and Europe. It is suggested that within a year of launching spot Bitcoin ETF, we could be looking at a whopping 32 to 74 billion in assets. That's some insane flow of money right there. Let's make a comparison with Canada. They have been rocking the ETF game, and the US is eyeing them as a benchmark. The US already has a taste of the crypto pie with Bitcoin and Ethereum futures ETF, plus Grayscale's Bitcoin Trust, flexing with a hefty 23 billion. But hold on, here's the plot twist. Potential competition and asset reshuffling within the crypto universe. The launch of US spot Bitcoin ETF might be the shiny new thing, but it could mean just a dance with asset shifting from crypto futures ETF or from stocks like MicroStrategy, which holds a lot of Bitcoin, or even Canadian spot ETFs and other investment avenues. It's like a crypto reshuffle party. And let's not forget the global impact. US ETF has this reach that extends beyond just their home turf. Institutions worldwide are eyeing them, not just the folks in the US. So the launch and performance of US crypto ETF could be the talk of the town on a global scale, influencing investment decisions everywhere. The anticipation for the final approval on January 10 has already given a rocket boost to spot Bitcoin. What's your take on this potential asset shift, and are we gearing up for the year of crypto ETF in 2024? And that's it for my sharing today. Thanks for viewing in. I'm Jun, a researcher with DXpert. Thanks for your time. I'll see you soon.